All right, hello everyone, and welcome back to daily update of my 1000 days challenge. This day, sorry, just a minute, I was just checking in terms of the technical issue wise, but yeah, so this is actually day 294, so let's get things started. All right, so first and foremost, you notice the balance has dropped around 100, and that's purely based on the experimental trade setup. So I did mention that I went for two short setup. They went against my favor because yesterday the bounce went against it, and I took loss based on that. Earlier today, I also took some further short side of trade because right now the trend remains still to be bearish in terms of, say, on the 4-hour and on the daily chart for some of the tokens itself. So I do certain pairs itself, I do go for short bias in that perspective when it comes to a trading kind of perspective. On the other hand, in terms of the market structure update, you'll notice that S&P 500 actually transited from bearish to neutral. And reason being is very simple. We actually managed to close with a higher low over here, confirming it. So that's for the S&P 500. So on the Nasdaq itself, we actually managed to close with a higher high. So we actually transited from a bearish to directly to a bullish market structure itself. So with now it being closed right above this 50 and 20 exponential moving average, tentatively it still looks to be bullish. But if you look in terms of this macro structure itself, this kind of parabolic kind of spike upward seems more like shorts closing in their position itself. So I'm not sure if this is sustainable or not, and potentially we could still see further downside momentum itself. All right, and moving on to, say, ASHR itself, tentatively, like what I mentioned, as long as it remain above these 150, 20, and all these moving averages itself, we definitely still lean towards the bullish bias. But of course, like what I say, this is upslope kind of a channel. So do bear in mind the upslope channel itself, when look in terms of a long macro structure itself, it does look like a bearish flag. So that is a potential negative in terms of technical bias itself. But until we break below this 3 moving averages itself, I will still lean towards the bullish bias that we can find support over here and continue and breakwards towards the upside of things. All right. And moving on finally for KWEB itself. So tentatively, we have reached the key primary resistance itself, which is 20 exponential moving average. Seems like it's been rejected right now as the market is already open. But do bear in mind that as long as it's not heavily rejected, and it could even form a double bottom itself, then we could potentially still go towards the upside, which in my opinion, long-term wise, for China stock market, we are still going to be in a bull run, but it's just going to be a lot more volatile in comparison to, say, the US market itself. As a result of, I would say, the way that China market is being structured and also being governed itself is very different. All right, and moving on to Bitcoin itself. So yesterday we did manage to close very nicely above these 200 simple moving average, which is tentatively a good sign on the daily chart itself. But do bear in mind that we right now seems to be a little bit oversold, but not to say that we cannot go any other lower. So for me, myself, I'm still keeping in terms of my long-term position hold for Bitcoin and Ethereum. But for some of the altcoins, I'm cashing out a little bit in terms of the capital out, but not to say that I'm totally saying that we're just going to go straight down. In fact, I do see potential bounces, but we could in fact retest this region again, once again. And if it does retest the second or third time, then tentatively it could become weaker. But as long as it remains relatively supported at this above this 37K mark, I will still lean towards further bullish momentum. But of course, there is a reduced bullish momentum with today's candle closes below here, because I would actually want it to go above the previous yesterday high, which hits around 43,000 itself. So with that said, I've come to the end of today. I did mention, okay, so on the 4-hour chart, the reason why I mentioned earlier was because when I was recording, I was updating the slide itself, I actually see this pattern itself. So it was actually accumulating right below this 20 exponential moving average, which I mentioned is a key resistance itself, key dynamic resistance. So I was saying that if we could break nicely above it, then there's a potential long setup for mean reversion kind of trade. So I do understand that with this kind of high volatility, mean reversion may be a more plausible kind of trade setup. But because generally for the past, I think 6 months, 8 months, we've been generally facing a very clear, strong kind of a bullish trend. So trend following technique works a lot better. But right now I may be going to explore a little bit more on the mean reversion techniques and see how I could trade along with that as well. But with that said, I've come to the end of today and we actually just broke down here. So definitely not entering along, and there isn't a criteria being met. As you can see that there wasn't a clear close above. Even if you look at this, the close was at the 41,217 and the 20 exponential moving average was 421,269. Yeah, so it's actually still above. So we definitely didn't close right above here as well. So with that said, I've come to the end of today. And if you guys have any questions, feel free to drop by your comments below. And I'll see you guys tomorrow. Take care. Bye-bye.